Yes, good evening. Anyway, good morning, good afternoon, good evening, depending at the time when you're viewing this video. Yes, good morning or good afternoon, good evening to my fellow colleagues. So, actually, today, the reason as to why I'm recording this video, it specifically goes to my fellow traders, my fellow forex traders. Yeah, forex trading is really good and it is changing people's life. So as long as you actually remain focused and as long as you have passion for it, bro or sister, you can make it. You can make a breakthrough. You can make a breakthrough. So the reason as to why I'm recording this video, it is because first have a look at this forex account. I was trying to scalp this account. It was it on Monday. Oh yeah, it was Monday when I was trying to scalp this account. Moreover on gold. So I was trying to scalp it on gold using, scalpers. They do a scalp using either 1 minute, seconds, like that, and they are in, out, just like that. So as I was trying to scalp it, trying to flip it, bro, this account was $15. It had $15 initially before trying to do that. So I was almost blowing this account. I was almost blowing it. Why? Because of gold. I was trying to scalp gold, and the disadvantages of highly volatile forex pair XAUUSD. It is highly volatile, and most of the traders do really like it. I don't know why. They like it. I don't know why. So this account, it was on $2 after I was almost blowing it. Then I sat down and asked myself, what should I really do? What am I going to do? Can I just blow it once using gold? And I say, let me just chill the account and maybe look for some other capital. So then I said, no, that isn't the decision I should make. So I made a very, very perfect decision. I decided to do swing trading. You can see this is 4-hour time frame. Yeah, it is on a 4-hour time frame. I made this is 5 minutes time frame. Anyway, let me first show you. I made my entries on H1 1-hour time frame. That's when I made my entries, and see my stop loss here. So my take profit is around here. So obviously this is around I used around 1 to 4 risk to reward ratio. So I decided either to blow the account or to double or multiply it in maybe 5 or 3 folds. Rather, I'm doing it in 4 folds. So you can have a look at this account now. You can imagine from $2 to $13, and hopefully it's going to move. And it is still moving. It's still moving to my preferred direction. Now, why are we like forex traders? I'm going to give you the reason as to why most of the times we end up blowing accounts. There are many, but before giving you the reasons as to why we end up blowing the accounts, I want to talk about the different types or kinds of forex trading. The different types or kinds of forex traders. It's what I'm going to talk about, and knowing where you belong, it will actually give you a clue about whether you're to change or to remain where you are, whether you're to change the system you're using for forex trading or you're to remain where you are. So first of all, I'm going to talk about the different kinds or types of forex traders. Majorly they are 4, but most of the time there are 6, whereby number 1 it is scalping or scalpers. Scalpers. Then the other one, we have day traders, we have swing traders, position traders, algorithmic traders, and event driven traders. Now, why am I talking about different kinds of forex traders? It is because it will be after you getting to know the different kinds of forex traders, and then do what? And be like, yeah, this is it. Anyway, guys, first have a look at this. This was my analysis on Trading View. Yeah, this was my analysis on Trading View. I made this analysis, it was on 1 day, and then have that 1 day that as a time frame. So that was it. That's the analysis I made. Then of course I used demand and supply approach as well. So I used demand and supply approach, and then it's when I got to know where really the market was actually going to move. So hitting on 4-hour time frame, that is how it is really doing what? This is how it appears. So there we go. Hope you're seeing it clearly. So that is it. Let's see. You see this reward ratio, it is 8.27. Crazy. You can imagine. That is the role of swing traders. They don't mind whether the risk reward ratio is all that high, but their aim, it is to remain in a trade whether it reverses or not, and that's why they end up being what? Profitable. So moving on to different kinds of forex traders. Obviously we are going to see who are scalpers, who are day traders, who are swing traders, who are position traders, who are algorithmic traders, who are event driven traders. So scalpers, for them, they aim at capturing small profits from minute price movements and hold positions for only a few minutes. So those are scalpers, and scalpers, they can come into trade for like, they always use either 15 minutes for analysis. That is most of the times when your scalpers do like gold, trading XAUUSD gold, yet it is highly volatile, but that's what they like. So they come in 15 minutes making analysis, and then pressing their entries on a lower time frame, let's say 1 minute. That's when they enter, and then for just a few minutes they are out. Those are scalpers. So now scalpers, yes, of course they have advantages and disadvantages. Let's say the advantages of scalping. Yes, high frequency. There is high frequency. Yes, we know that there are numerous trading opportunities that exist throughout the day, which can lead to substantial daily profits in case the trade is successful. Once you execute a trade, and in case it is successful, which is okay. In case you have various number of entries and the trade it is successful, which is okay. Those are scalpers. And then there is a limited exposure. If you do scalping, have limited exposure. How? Which kind of limited exposure? Most of the times these traders hold a short period of time when they have executed the trade, which exactly limits them to exposure, like to a burden or sudden or large price reversals or market events. Yes, there is a limited exposure. But the disadvantages you can as well see. Most of the times the scalpers, they are the most highly broke traders. They are highly broke traders. And why is it that? Because of the transactional costs. Once you frequently trade, it means that the brokerage fees and the spreads can accumulate quickly, which potentially erodes profits. Remember, once you frequently press entries, just know you actually enabling, or it is a broker that is really going to do what? To benefit from trading. When you frequently press positions in trades, it is a broker that is going to benefit, since you're giving them a brokerage fee. It is a broker that will actually do what? Benefit. So there is high stress. Scalping requires intense focus and constant screen monitoring, which can be mentally damaging. Yeah, of course, scalping actually it has actually damaged people's, like, it has ruined, and it is actually ruining most of the people's lives, like traders. You find them when they are actually not doing well, they are not fine. Each and every time thinking about trade, thinking about the loss they have made, they want to actually come back to the market and revenge, which is actually not what? Which is not good. So let's move with the effect of time. Let's move to day traders. Most of us, we know that day traders capitalize on intraday price changes, closing all positions before the market closes for the day. For them, they capitalize on intraday price changes. Yeah, so advantages we have, like, there is no overnight risk. What am I talking about? Overnight risk. What is an overnight risk? Remember, if the market is moving around night, or if there are some news or events in the middle of the night that would occur, obviously to someone who's a day trader, it occurs when they have closed the execution, when they are no longer in the market, which is good. Then flexibility. Day traders have free time after the day trading. Yes, after the trading day ends or closes, these day traders, they have that kind of free time. They have time to stay with their families, like being around physically and mentally with your family. Not being around physically, but mentally or psychologically you're not around. Maybe emotionally you're away thinking about trades. So, and those are the advantages of day traders. And let's look at disadvantages. First of all, it requires discipline. If you're not disciplined, you end up closing positions when the day it has not even ended, which may if you see some substantial maybe changes, you end up closing positions, and this causes some suboptimal exits. So there is also active monitoring. Oh my God, this makes these traders to actively be monitoring around the trades and to spot or manage their trades effectively. So let's move to swing traders. This is the reason as to why I'm changing. I'm moving away from actually scalping to swing trading. You can imagine moving away from scalping to swing trading. Yes, I'll definitely play what we call delayed gratification than following each and every trade. I'll definitely play a delayed gratification than following each and every trade. So swing traders, we know that these traders target on short to medium time price swings within a large trend, holding positions for several days to a couple of weeks. Now you can have a look at this trade. So swing traders, for them, they target the short to medium time price swings within a large trend, holding positions for several days to a couple of weeks. Now this is a large trend. This is a large trend. This is a larger trend actually. It is an uptrend. It is an uptrend. Now swing trading, someone can swing from around here up to here. You can swing from here up to here. Just it's like trading within trading in zones. So it's like trading in zones, but you need to also apply the other approach of demand and supply. You need to apply the approach of demand and supply. I will tell you in another video how we apply that. So swing traders do that. The advantages would be it is less time consuming. Yeah, of course, you guys, swing trading is less time consuming, and it requires less active monitoring compared to scalping or day trading, which allowing more flexibility. You can do your other stuff. You can do you can chill around maybe with your family members, since you have less time to actually monitor the trade. That is the perfect advantage about this. There is also what we call significant gains. So swing trading, it enables a trader to capture large price swings, and which leads to more substantial profits per trade. Yes, I've shown you the risk reward ratio here. I am from showing you the risk reward ratio. You see, it is 1 to 8. It is 1 to 8. You can imagine the risk reward ratio. It is 1 to 8. Now if we go back to this trade, let's see how it is performing. You see, by the time when I was beginning this video, it was around $10. It is now approaching what? $12. You get, and the lot size I use is not all that high, and this trade and this currency pair is not all that volatile. I use a lot size of 0.01. You can imagine. I used a lot size of 0.01 on this kind of a currency pair. How about if I had maybe what I can tell you guys right now, I'm not focusing on money. No, what I'm focusing on the number of pips I have managed to do what? To obtain from a trade. That's what I'm focusing on. So it is about, let's just wait and see how it plays. We've been on swing trading. The disadvantages would be the overnight risk. Yeah, overnight risk. Remember, positions, once you held positions, most of the times once you are in a swing trading, it then means that you're most likely to leave the trade to execute like even during night hours. So this is that the disadvantage would be you may be exposed to over weekends, or exposing the account to gap risk. What do I mean by a gap risk? Gap risk always happens when prices jump significantly between sessions, and when there are change of sessions, maybe from New York, maybe from this session to another. Those kind of trading sessions. There are many. They are like 4 majorly, or 5, but we majorly consider 4. So if there is that kind of trading session, so you're most likely going to expose your trade to gap risks. It also requires patience. Most of the traders lack patience. Oh my God, most of the traders lack patience. And remember, this thing demands patience. You have to wait for the trade setups to mature and let the profit learn their course. You need to wait the trade setup to mature, and once you're in a trade, please wait till when it hits your take profit. Remember, you always risk what you can or what you're willing to afford. Remember, you always risk what you can afford to lose, or you're willing to do what? To lose. So even if it hits your take profit, which is okay, you can afford to lose that. Now guys are going to tell me that you need to expose your trade to maybe larger number of pips and making it, maybe risking it highly. No, please make sure make sure before entering the trade you wait for confirmations to appear before you enter the trade. Make sure you wait for the confirmation before you enter the trade. So I had to wait for the confirmation. I waited for a confirmation. So this account is very small, which is okay, but we are just learning from it as we are doing what? We are trading. It's better you learn than failing to do what? To learn something. So let's move to the other type of traders. Have the position traders. Position traders, we know for them they focus on long-term market trends with positions open for weeks, months, or even years. Most of the times this is actually used by the trading institutions or banking systems, something like that. They are the ones that do really like this position trading. So for them, you know, like you can execute a trade and you leave it for, you hold it for weeks, months, or sometimes even years. So it's most of the times it is done by institutions, not retail traders. So the advantages we have about here, we have like minimal efforts. Remember, it requires the least amount of active management and chart time, often just a few hours a week for analysis. You can just use some few hours for analysis, just a few hours a week. So there are also lower transaction costs. Remember, you have less trading, like infrequent trading results. Remember, infrequent trading results in significant lower brokerage fees and commissions. Lower transactions means that you're not trading all that frequently, and lower transactions cost you, meaning that you're not always like trading all that frequently under position trading, which significant lower brokerage fees and commissions. Remember, this kind of, there are a lot of brokers for them, they focus on that kind of the fees. Most of the times it is being captured under the spreads. If the spreads are wide, just know it is in favor of the broker. If the spreads are tight, just know it is in favor of a trader. So the more you trade, the more you expose your account to brokerage fees through the spreads. So the disadvantages for position traders, one of it requires large stop losses. That's why if it is the institutions that use this approach of trading, because for them they are entitled to having large capital amount. So even if they are large stop losses, which is okay because their capital is all that wide, and it is also it also requires patience, because patience is also crucial here, since it takes like a week, sometimes a month, or even years. So you have to be patient if you are using position trading as an approach. So the other one, we have algorithmic traders. Algorithmic traders, we know that these use computer programs to execute trades automatically based on a set of predefined rules and mathematical models. So algorithm, you use computer programs to generate this algorithm, and then they help these traders, in case of their absence, to execute trades automatically, since these traders do not want to lose that kind of a trading opportunity that has come around. They decide to use algorithmic trading, and you're going to find various number of traders using trading bots or robots and what have you. So the advantage would be speed and efficiency. Yes, we know that, since most of the times you're not around, it is flexible, and it keeps on like opening up trade executions or execute trades even if when you're not around, at a very high speed. Elimination of emotions. Yes, we know that if we talk about elimination of emotions, most of the traders have emotions in whenever they see some kind of market reversals. they are emotionally attached, and most of they end up doing what? Exiting the execution or ending the trade. So back testing strategies can be thoroughly tested against historical data to assess viability before risking the real capital. Remember, algorithmic traders, for them, remember, since it is now a robot using that kind of algorithm or a system, a computer generated system which is following an algorithm, it tests the historical data thoroughly, and it assesses the variability before the risk or before risking your real capital. It is a 24/7 operation, of course, yeah. So long as it is on a power supply which is stable, it is always a 24/7 operation. The disadvantages would be, now you guys, before that, first have a look at this trade. We are in. Let me first check on the lower time frame. You see, it is actually showing that there is a high chances of hitting this take profit, and it will eventually hit it. I'm going to be patient. It will eventually hit it. So the reason as now, some of you would like to know the reason as to why I had to put my stop loss here. Remember, I told you that I used demand and supply approach. So I use demand and supply approach. So the reason as to why I placed my stop loss here, this one would be on a premium point or premium point. It is because of this last bearish candle here before the massive buys. It is around here. This was my last bearish candle before the massive buys. That's why I had to put my TP or take profit there, because I know it will eventually come here, and because of the demand itself, it may end up going back in the upward direction. And once I wait and I fully confirm that it is moving in an upward direction or in a bullish direction, what I'm going to do, I'll also hold that trade. So I'm not I've decided to share this because I know it will help many of the traders switching away from scalping to maybe day trading or swing trading, because most brokers are scalpers, and most forex traders or beginners that do really cry a lot because of capital and what have you, it is majorly, sometimes it is because they like over trading. They want to take each and every trading opportunity, which is not okay. They analyze the market on sometimes 1 hour time frame, yes, and use 15 minutes some maybe to confirm and place entries on 5 minutes using a top-down analysis, which is good, but most of the times it is not okay to do that because you're not aware of the overall movement of the market. But these ones are 1 day or 4 hour time frame. It will tell you where the market is heading. You can even use a weekly analysis and place your entries using a 4 hour time frame. You get? Press your entries using a 4 hour time frame. If you use a 1 day time frame and then 4 hour time frame, you can as well press your entries, or you can press your entries using 1 hour time frame. But confirmation, you need to either use 30 minutes time frame or 15 minutes time frame to confirm and see whether the market has, or whether made a retest or a retest is confirmed. I'm going to show you how we do really confirm. If a retest is confirmed, there is this magical trading block we use for confirmation, and it's called This one here, it is a magic trading block. It's called Samuel's magic trading block. Most of the times we use it for confirmation, and it is very good. It's very good whenever you're confirming. So and I will make a video showing you how we actually do what, how we actually follow that. So this is, by the way, this is a 4-hour time frame, guys. This is a 4-hour time frame. Let's move to 1-hour time frame and you have a look at it. 4-hour time, that's 1-hour time frame. You see, tell me whether a scalper can hold a trade for all that long, because someone who is scalping, they would enter in the market right here and then put their take profit around here, around this position or around this position. So but someone who is a swing trader, you see what is really happening. This is a time whereby confidence meets strategy. Confidence is meeting strategy. The strategy I'm using, everyone is capable of using it, so long as you're willing to learn. Just learn what I'm telling you to. The strategy I'm using, everyone is capable of using it. Now, moving to the other remaining type of all kind of forex trading, all kind of forex traders have the event-driven traders. Event-driven traders, they focus on profiting from price fluctuations triggered by significant or specific occurrences. Remember, for them, they focus on schedules like economic announcements, earning reports, central bank decisions, or the NFP, non-farm what? Payrolls. So those are the event-driven traders. If you're interested, you can make research about them, but that is it. So I know by the beginning of this video we were asking whether you guys can tell. My major aim was actually getting you to understand which kind of forex trader do I need to become, which kind of forex trader should I be. Do you want to be a scalper? According to scalpers, the disadvantages are also around. Do you want to be a scalper? Do you want to be a day trader? Do you want to be a swing trader, positional traders, or you want to algorithmic traders or event-driven traders? Algorithmic traders and event-driven traders, for them, they have got disadvantages as well, which are not actually good. Of course, there are disadvantages, but I would not recognize someone to join this. But do you want to be a scalper, day trader, swing trader, position trader, whichever? So please make some bit of research on the kind of what type of trader you want to become. Trust me or not, you'll make it. Life is all about focusing on something that you do really want. Life is about focusing on something that you want. So going back to my 4-hour time frame, let's see. Yeah, it's about. Let's first have a look at the trade. Have a look at the chart. You see 12.3, which is okay. Just imagine if I had capital and I had made this, I'd maybe said, yeah, let me go into swing trading. Let me just hold this position for quite a long time. Maybe if I had used a lot size of, let's say, 0.08 or 0.1, how much money would I be? How much money would it be actually? How much money would it be? How much money do you think would it be? But right now, in case you do not have capital, focus on the number of pips. The number of pips you are to achieve. Focus on the number of focus on the number of what? Pips. So you see, this is USD CHF, and it's not a highly volatile market, but you can imagine hitting or achieving 148 pips. Crazy, my bro. Achieving 148 pips, you can imagine. Crazy.